Welcome to TradeTheMBI.com. This is John. This report is for the 22nd. Well, the ES reaching that 100% plus mark and matching the highs from before just within a fraction. If you'd count it from the close, it reached its peak. We'll see if it's able to push back up over there. Interestingly enough, strong move from MBI White, so short activation there and a dip of the magenta beginning. We'll see if it maintains itself throughout the day on that. But previously, still well above the 33 right there, and looking good. I mean, blue above gray right in that case, and shakeout rising. We did have the yellow uh, extreme histogram, which means that there's a possibility we get pretty decent fill back in between that large candle for the breakout setup. But most of this was tied to the movement of the NASDAQ, and you can see the NASDAQ has clearly been the leader throughout this. And we've talked about this for a while now, and that strong MBI readings and literally very little short activity. So you see the disparity between the two markets is pretty evident and growing. Now, you have positive extremes on the NASDAQ, so it's going to suffer a little bit more when there's a little bit of a pullback. And that will be necessary because if that fills back in, I think that'd be more healthy than continuing the run without doing so, uh, simply because then you really create a greater exposure the further you go in time, and that's not filled because the further away you get from it, the deeper that move back is going to be. This was expected. I've been talking about it for a while. The disbelief that the market was having of what the Fed was going to do and ignoring them, and it was costly because moving back to the zero as was projected from the MBI peak there, the previous one that took place. Now it just took a while for rationalization to come to the understanding that the Fed's not backing down on that, and they wanted a normalization of rates, and they've achieved it. Um, and it gives them a lot more flexibility now going forward. So everyone thought they would never be able to get past their zero rate, and everything would fall to collapse status, and that did not take place. So for all intents and purposes, that got one correct overall. Big help here, though, was oil. And this is still not even that great a help. This is a new inflationary price of oil, uh, considerably higher than it has to be, but enough to give some life and breathing room to the ability of the economy to absorb everything that's taken place. And now you creating a new normal. And the longer that goes out in time, uh, the easier it is to assimilate it. So the resilience that nobody thought existed within the economy, and that proved to be incorrect analysis from a lot. And that's something we talked about for quite some time. We kept looking for signs of this collapse that was going, and we just weren't seeing it from a market standpoint. And everything, while not super duper, was enough to just hold on. And as long as you don't see that significant change in unemployment and or economic activity, there's no reason why it won't continue. That does put pressure on the Eurozone a little bit, where they were really pumping it up. But again, this is all you have to do. You just get it up into a range so that when it does have a corrective cycle, you're still above and in that middle range that you're looking for, as opposed to what happened before where things just started escalating and you moved to subpar. Is subpar where it should be? Well, where it should be versus where it is. I mean, obviously, we knew the range that was desired, and they've achieved it again. So you can't fight the Fed. It's just that simple. It's an axiom that's existed forever, and nothing's changed on it. From a gold standpoint, that's going to moderate gold, Bitcoin, all of them, because uh, the impetus to be in them has sort of been stripped away a little bit. Now, can that all change with global events? Absolutely, no question about it. But at this particular point, things are fairly stable, and you can see that softness within Bitcoin potentially could be changing here. You're getting the magenta moving above shorts. Is that going to be enough to create a significant spike? We'd have to start seeing the turnaround and the shakeout first. but it's held up fairly nicely. Filled in its positive extremes. Got a little bit further to go if it was going to completely do that. We would have had to have seen the break below the 50% on the MBI white spiking up here, but it wasn't a significant spike, and you ended up with magenta over yellow, and that's usually enough to hold things up. So that's what we've seen in the past. Um, Flipping to the 5K ES, this is what we're looking at post market at this particular stage. And if we scroll back a little bit, we can see from that intraday, it was sort of the inverse of what had been taking place. We ended up early on with a steady incline, and then there was the dump for Friday as everyone took some of those gains, locked them in, and all you see in the post market is just that pushing back up again, and that's where we currently are. Just filled it right back up to what had been sold off. So again, always looking to just wipe out the weak hands when they're not expecting, and flip to the opposite direction. And that's what markets love to do. And mean reversion, it's a real thing now, which is unusual because it hadn't been for quite a number of years. So I think it's great to see things starting to revisit the past, if you want to say, but literally achieving more of a normalization. That doesn't mean that it still isn't controlled in some aspects. It's just easier and more defined and literally, orderly. Particularly when the algos are running things, it just makes it a little easier, particularly since we get a nice clean line with it. As always, though, I will continue to update you on anything relevant. Trade well. We'll talk to you later.